Hello and welcome to this week's crypto update. What's happening in the macro news and how does it affect risk on assets such as Bitcoin and the altcoins? Well, first of all, let's look at the longer term. We have Coinbase CEO Brian Armstrong, one of the biggest names in the crypto space, just made one of his boldest predictions yet. What is it? The rough idea I have in my head is we'll see 1 million Bitcoin by 2030. Big claims. That's a long way up from here. It's about a 9x, which is a huge climb for the biggest crypto out there. Why does he think that? Well, number one, regulatory clarity is landing in the US. We've already seen stablecoin legislation and market structure bill is next, and that's expected to pass before the end of the year. That will be huge. The US government now holds a strategic Bitcoin reserve, something that would have sounded crazy just 5 years ago, that's for sure. Global adoption is accelerating. Coinbase already provides crypto services to 140 government entities worldwide. Institutions are waiting on clarity. So while many hold 1% exposure to Bitcoin, they plan to scale to 5 to 10% once regulations are locked in. That's an unbelievable amount of additional capital come into the space. And while some hold, up to 1%, many hold 0. So this is a massive climb in additional money that could come into Bitcoin and the crypto space in general. And of course, risks are shrinking. Protocol flaws are combed out, quantum upgrades in the works, and regulatory shutdown risk fading fast. So in other words, all the elements that would be required for the really big money to come in a much bigger way than they've already done, it's all coming together. And this is why his longer term idea is we can see $1 million Bitcoin and beyond. Not the first person to suggest that either. And so what he says is the amount of demand, like the amount of institutional money just sitting on the sidelines waiting for the next bill to land, is huge. And like you say, probably the last piece of that legislation that's really required to, completely open the floodgates is expected to happen before the end of the year. So a lot of upside still to be had. What's happening with Ethereum? Well, on exchanges, just 14.97 million ETH now sits on exchanges, a tiny 12.36% of total supply. This is the smallest it's been in many, many years. And in the past 90 days alone, 1.57 million ETH worth 6.86 billion has been pulled off. So not only is there a really small amount of it there, it's coming off at massive rates. That tends to lead to supply shock. If this were to continue, there'll be less and less available, and it appears that demand could even grow much further. Where's the upside from Ethereum there? We'll see. On the other side of all this, there's the seasonality. So what we've been looking at just there are a couple of factors that would suggest in the longer term frame, there's a huge amount of upside to be had for Bitcoin, for Ethereum, and for select altcoins. But in a seasonality point of view, month by month, you can see here, on average, August is pretty much a neutral month, and September can be a negative month in general for Bitcoin. And of course, the rest tend to follow that. Of course, that doesn't mean you can't have a positive month in September, for example. This is on average. But what follows that, you can see October and November are, November being the number one month on average, October being the number 3, those two together, put huge potential upside there. So we could have a really strong end of year, depending on many factors, of course. But the reality is, at the minute, all eyes are on Jackson Hole. So what's that? It's a symposium where the Fed and central bankers meet up to talk about all the really exciting stuff in banking. However, it is something that we absolutely need to keep an eye on. First part in advance of that is just yesterday, Wednesday, we saw the July meeting summary from the Fed. And the interesting part about that is it revealed the majority of officials see inflation as a greater risk than a weakening labour market. Why is that important? So when they're deciding whether to increase, hold or decrease the interest rates, it's dependent on two key factors. One, the jobs market. If the jobs market is strong, they don't need to reduce interest rates. If the jobs market looks like it's getting weak, they might decide that they might need to help and intervene and reduce interest rates. On the other side, when it comes to inflation, if inflation is high, they might feel they need to increase interest rates, or if inflation is really low, they might have the opportunity to increase interest rates. Well, they're in between the two, and they have to decide which requires their assistance more. If they see that the job market is weakening, but inflation is increasing, one would require increased interest rates, one would require reduced interest rates. Which one do they choose? And what these notes suggest is they would be in favor more of that the inflation is something they need to deal with more than the jobs, because they're saying the jobs market is okay. So that would suggest it would be unlikely that they would reduce interest rates. But having said all that, this meeting that they had, that we have the notes for now, happened just before the new data showing more weakness in the jobs market. So maybe their opinion might have swayed since then. Where we might see some insight into all of that is in Jackson Hole Symposium, where Jay Powell, of course, will speak, the head of the Fed. And all eyes will be absolutely peeled on this tomorrow. Why? Well, there's 3 potential outcomes that will be seen within his speech. If he signals hawkishness, in other words, if he's sort of referring to holding rates steady amidst inflation fears, so they're worried about inflation, so for that reason they won't reduce interest rates, that's one outcome. Another is where he signals dovishness, where he's hinting at cuts to boost economic growth if they have that fear of the labour market. And of course, the third is where they sort of have that wait and see approach. We must wait for more information. We can't make a decision as things stand, because of course there's going to be more economic data will be released between the Jackson Hole tomorrow and the Fed's September meeting. And so what are the likely outcomes here? Well, if they were to signal hawkishness, the market at the moment, over 90% were expecting a rate cut in September last week. That has reduced a little bit down to around the 80% mark. However, the vast majority of the market still believe there's going to be a rate cut. If he's coming out saying, don't think that's happening, we can see that inflation looks like it's going to go up and we're afraid of tariffs, etc., and it's going to go higher, therefore we can't reduce. If he says something strongly towards that, you could see the market pull back pretty strongly. If, on the other hand, he comes out dovish and goes, well, we're happy enough with the inflation, we're going to have to help out the economy, therefore we are, looks like we are going to reduce those interest rates, then you could see the market really start to pump. On the other hand, the third one, and I believe the absolute most likely, where he comes out and says a whole lot of nothing and basically says we're going to wait and see until we have more information and we'll decide then, because the market is expecting that rate cut, and if he makes no signal to sort of back that up, I think in general we go sideways, but I think we'll have a little bit of a pullback, but not too severe. And I think that's the most likely thing to happen, but we'll see tomorrow. What does it mean for, the likes of Bitcoin and others? Well, if we look at the charts in Bitcoin here, this is the daily, so every line is 1 day. You can see here that we've come back to this sort of 112,000 level, an important level. As you can see, it was the top of the a local top, but also then down as far as 110 is the top of the previous top. So within that box, there's been very little trading, and more often than not, that needs to get filled again. And so I think it's highly likely we come back into this box and start to accumulate more. Of course, if there's really positive news, it'll bounce up. If there's really negative news, it'll go down much further. But with the expectation that Fed say a whole lot of nothing, I think we come down into this box and trade sideways. Also, if you look at the likes of Ethereum, we can see that, it took Ethereum a long time to break through this sort of resistance level of 4,100. It's got above that. It's coming back to it now and testing it again. I think the Ethereum bulls who had to work so hard to get this above it, they're going to defend that very strongly. I could see us come back into the sort of box just between the sort of 4,000, 4,100 mark. Again, based on the Fed having a fairly neutral outcome. And we'll accumulate there and wait for the next move. So overall, I think we'll see a lot of volatility tomorrow, depending on what the Fed come out and say and over the weekend. And then we'll take it from there. Hope you all found that useful. I'll talk to you all very soon.